Hello, everybody, again. I'm Hugh Johnson, the chairman of Hugh Johnson Advisors, and welcome back to another session of Hugh's Market Minute, so we can talk a little bit about what's going on in the economy, a little bit about what's going on in the financial markets, and what we think we should be doing about it in portfolios. You know, the number one question I get, and I think it's on everybody's mind, is how could it be that the stock market has held up and done so well, given all the problems that exist in the world today, particularly problems on the geopolitical front, which of course means North Korea. That's obviously got to scare everybody and worry everybody. That's a big worry. Why does the stock market do well in the face of a concern such as that? Why does the stock market do so well in the face of the enormous problems that the weather has presented, not just for Puerto Rico and Texas, but really throughout the country? And what about all the other concerns that we have? Domestic tragedies such as we had in Las Vegas. There's a lot to worry about, and the real question that everybody asks is, how is it, Hugh, that you can explain that the stock market continues to go up in the face of all of these deep worries or deep concerns? Those concerns will not go away, but the number one thing I think to keep in mind is you watch at the performance of the financial markets, the performance of important economic variables, and ask yourself the question, is the message of the market variables, is the message of the economic variables that we have further to go in this already long cycle, which consists of a bull market followed by an expansion in the economy and also followed by a rise in interest rates. And the answer to the question is the message is quite positive, continues to be quite positive, not just the stock market going up, but some of the so-called internal tea leaves of the stock market. You start to see small and mid-capitalization stocks, smaller stocks, outperform larger stocks since the beginning of August. That suggests, of course, that investors are comfortable taking on more risk. It's also the case that you see it in the credit markets, where quality spreads are tightening up some. That's also an indication that investors are willing to take risk. Investors are willing to take risk because they believe prospects for the U.S. economy, and importantly earnings, continue to be not only positive, but are going to continue to even get better or improve over time. They might improve, they might not improve, but they'll probably still stay positive, and that means we have further to go in the stock market. The big concern, which I've expressed in the past and I express now, is not just all those concerns or worries we just talked about, geopolitical concerns at the top of the list, but the primary concern, which is valuation. And I look at some of the things, first of all, the outlook or prospects for the economy, which is positive. The outlook is positive, but it doesn't look like we're going to see very strong growth. And that growth implies to me a very slow growth in earnings. But believe me, the rest of Wall Street disagrees with me. The consensus on Wall Street is that earnings are going to come in much stronger than I'm expecting, and therefore the stock market has plenty of room on the upside, or at least some room on the upside. Maybe plenty of room is overstating it. But some room on the upside, and you should remain positive and not be overwhelmed or overly concerned about valuation. And I think I take that pretty seriously, and I think that might just indeed be the right answer. Of course, prospects for earnings could get even a little bit better if indeed we start to work our way towards a tax cut in the U.S. economy. You know the Trump administration is proposing a reduction in the corporate tax rate from 35% down to 20%, and also some cut in individual tax rates, for individuals. There'll also be there's a lot being discussed about changing the tax code to repatriate a lot of the cash that's in corporate coffers in other parts of the world that has not been repatriated, because the corporations that have that cash choose not to repatriate that money and therefore pay a U.S. tax. That might be changed. That money, $2.5 trillion, might be repatriated under a new tax reform or new tax policy. We're probably a long way from getting that done. There's plenty of objections. One of the big objections, in fact, the biggest objection, is that it will raise the size of the federal budget deficit, and there's a lot of folks in Congress, in the House of Representatives and the Senate, that have a problem with increasing the size of the deficit, and therefore to try to keep that deficit down, such as to eliminate the deductibility of state and local taxes on your tax form. That could raise the revenues, but at the same time, there's a lot of states, Massachusetts, New Jersey, New York State, California, high tax states that object and object strenuously to that. So it's going to be a real battle in Washington to get some tax reform. I think we will get tax reform, and I think because prospects for tax reform on top of fairly good prospects for earnings is positive, the stock market has gone up and has stayed up. So we're going to stay positive on the prospects for the stock market and the economy. In other words, we have further to go in the current cycle. As a result of that, we continue to maintain a fairly meaningful allocation in the portfolios, balanced portfolios to stocks. Got a lot of good names in the portfolios that have performed very well. We've had pretty good performance this year. That's not to say, of course, that we're not watching pretty carefully, watching for those things that could signal the end of the current cycle and the start of a bear market that would be accompanied by a recession. I don't see that in the cards right now, but nevertheless, we have to be watching for that, particularly watching for that since we have the Federal Reserve is starting to lean just a little bit harder towards restraint, to raise interest rates and to reduce the size of their balance sheet. That's probably not going to have a big impact on the economy, not a big impact on earnings, at least at this stage. And remember, at this stage, we still have relatively low interest rates. But as we move further into 2018, late 2018, and then start to move into 2019, we might start to get some problems, and those problems will show up in the markets. And we've got to be on our toes looking for those. There's always risk in the markets. We always could be wrong, but that doesn't mean, even though we could possibly be wrong, that we won't be continue to be very vigilant. We obviously very, very appreciative of the confidence you continue to show in us. We're trying to deploy our resources as much as we can for getting really better at the whole prospect of, at the whole process of investing, of being good at asset allocation, whether we should raise or lower our allocation or our exposure to the stock market, whether we're good or bad at picking individual securities. We've had some real good ones over the last couple of years. We're continuing to deploy our resources to do a better job for you. And once again, the most important thing is we really appreciate the confidence you show in us. Keep in mind, we're headed in towards year end. Dan Nolan will be talking to you periodically about some of the things you can do in preparation for year end. And that'll be very important. Again, we very much appreciate not only your confidence, but also welcome you to give me and everybody else here at Hugh Johnson Advisors a call. If you have any questions about either your individual portfolio or what's going on in this world of it, and maybe not even questions, maybe you can offer some insights that might be help us think this through. So thanks very much. Once again, appreciate it, and I look forward to the next time we'll be back together and we'll be talking about what's going on in the financial markets, and hopefully it will continue to be positive or good times. Remember, though, corrections along the way are not unusual, and they're often just corrections and not something to get too worried about. But nevertheless, I look forward to the next time we get together, and once again, thanks for your confidence.